learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I hope you had a wonderful day. Today was a very wild one, and we got to talk about recession and Powell, and we even have Powell tomorrow, but I have a big play, kind of, and I want to go over it. I'm going to be shorting FedEx, but this one kind of crept up on it. Pretty much, you have earnings tomorrow out of FedEx and transports, and really, with how things have played out, I would definitely keep an eye out for that. So, we're going to go over that, but then we got to talk about what happened here in the market today. Why did the market open up down? We shot up. It literally, look how vertical this was in the morning, only to come down and every index closed red. It was small, but there was a lot to unpack today, and it has to do with the recession, has to do with inflation, and we also got a bunch of policy. If you didn't see oil today, it's going to be an interesting one. So we got a lot to talk about. I have all of that, the recap, the plays that we made. I did make another bank play as well, too. We're going to go over the FedEx as well as some other scanner plays that popped up today, and then the plays for the rest of the week, the rest of the events, and that's pretty much it. So drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, just for this week only, limited time only, first link on this channel, we are streaming the stock market live. It's free. Yeah, youtube.com/the trading fraternity. Usually I would say the stock market. Okay, it's getting awkward now, so I don't want to just yeah, I'll see you there in the morning. And God bless you if you've been supporting and holding it down. You are fighting for the good, You know what I'm saying? It's beautiful. It's beautiful. But anyways, let's talk about it. Let's get to the keys. What happened today? Let me just start with this. Why did we gap down? I'm telling you, yesterday was good. Remember, the dollar's been chilling out. Even today, the dollar was chilling out and the bonds are weird, but why did we open up down, and why did the cash open lead to a rally? This is the factors, or the juggling. Pretty much yesterday, we were a little bit worried about inflation, but that went out the window. The dollar dropped a little bit. The bonds kind of calmed down. You know, market was able to do its thing. People were more worried about inflation. Today, we woke up worried about recession. And now we're going to get to the main point of this, but I'm telling you right now, you started this week with them saying, nah, recession isn't inevitable. Biden was talking about it. Now you got Powell talking about it. And if you haven't noticed, depending on what the market does and depending on the news cycle, you're just juggling back and forth between the two. It's, are we worried about inflation today, or are we worried about a recession because of how we're handling inflation and the Fed? That is the big key you need to take. So that's why we started down. We were able to run up. Again, Powell was right there in the morning, and this is the first key. Why did the market like Powell? I thought it was a little confusing. I don't know if I believe it, but there was an update. I even learned something new today, but essentially the thing that was bullish today is that Powell, he really committed his stance towards inflation, that he was going to raise at whatever pace was necessary. It did depend on the actual data. Again, he's been holding to that and not shying away from that, but he also acknowledged the risk of recession. He said it's out of his control, and his direct quote from today was that a soft landing would be very challenging, but he did say a recession was impossible, but he also kind of did that back and forth. You know, he'd answer it one way. Later in the day, someone would ask him the same question, and he pretty much said, yeah, it's not that big of a deal. But now this is what I learned, and this is what some people got out of today. They considered Powell less hawkish simply because he did not use the word unconditional in regards to his commitment to bring down inflation. Pretty much, he didn't use the age-old phrase used by other central bankers like Mario Draghi in the past, or even Powell like 2018. He pretty much did not outline something, put him into a corner, and give us that bombshell. The fact that he didn't say there was an unconditional commitment and that it is more flexible, but we kind of know where he's headed, the market really liked that, and they interpreted that as less hawkish. I'll even tell you right now, in the next coming days, if we do get a bounce or not, you have to watch out for this. Watch the Fed futures after November and what they imply, because people are already saying, if you take a look based on the midterms, the Fed futures over this last 2 days of rally, they've been calming down as people are getting more of the Fed. We're seeing how things are playing out. Oil's coming down, but people are expecting that the Fed will slow down the rate hikes as we get towards the election cycle. So keep that in mind. But that was the first big key of the day. It was inflation versus recession. People felt good with what Powell was saying towards inflation, or now this heightened up approach. He acknowledged the recession and people were kind of battling back and forth, but it doesn't seem like anybody's worried, but we'll see if that changes in the future. But that was the first part. The second big part of today, the dollar was still playing weird catch up. Like I said, yesterday with the dollar and bonds, it was weird. We were saying, watch for the dollar to react because the dollar wasn't moving that much, but we still got a big gain and the bonds were crazy. But today, the dollar went down. We were still able to go up. The bonds went up by a big margin, and really we're playing a weird game of catch up. But like we said over the weekend, take a look at oil. The moves are getting bigger today. Oil was down like 5-6%. It touched 101 at one point, and this is very big. There's a lot of legislation. They're talking the gas ban or the gas tax holiday, other plans they want to do, but this is big. It's getting more meaningful because where the oil goes from now, it will have a broader effect, and depending on what happens with legislation, it really might give the next signal for another type of play, believe it or not. But that's what we're going to see over the next few days. Coming into the rest of the week, you will get Powell tomorrow. Again, today was important, but kind of a non-event. We really moved like yesterday. It was kind of weird, but you're going to get the bank stress test as well. So Powell and stress test tomorrow. FedEx with the travel earnings, that could change some of the sentiment or bring back fears like we saw with Walmart and Target. And then the consumer expectations for Friday, the UMich consumer sentiments, those are going to be very important. If anything, I'm thinking that will probably be the big move that will snap us out of a streak because people are trying to see where is inflation expectations, where are recession worries, and we're just going to go back and forth, and whatever data could support one claim or the other, whether it's FedEx earnings or the consumer expectations, we'll probably get our final move by the end of the week with one of those two. So that was the breakdown. Super straightforward. Let's talk about the plays now. Let us get into the plays. So I almost messed that up. But as far as the first play, like I already said, FedEx, I am really, really liking this one. They have earnings tomorrow, so we're going to see what up. But the thing I really like about it, it's a travel stock, and this has been very key. Don't forget, in March and April, travel was leading the way down. So like I said, this is for consumer and companies. Any of the data gives us anything. Don't underestimate the market's ability to kind of have a knee-jerk reaction. So that's what I like about it. And then finally, it is at a multi-year support level. So here is the 5-year chart right here. And as you can see, draw that line to where it's at all the way across. That was a big drop from 2018. It acted as support for 2018. That's when they went crazy, when they ripped at the end of 2020. This is around the level we gapped down to on the last earnings when things weren't looking good. But pretty much, this is a very, very big level. They are pricing in about 8% for the move tomorrow, and on average the stock moves 5%. So we'll see what happens. 2 earnings ago they moved 9%, the other one they moved 3.5%. So kind of in the middle, but like I'm saying, just with how everything's looking, the data, how people are responding, again, this stock just being at this multi-year support level, I think it's going to be a very big one. So what did I decide to do? I did the short share strategy. I shorted 100 shares at around like 3 something or 230. I was way off. 230.15. I grabbed 100 shares short, and then I bought 3 calls at 255 to cap my gains or cap my loss. And then if they had a good earnings and rocket in, extra insurance might be profitable. So that's why people were asking, they're like, why did you buy so many contracts? Because again, if it ends up rocketing because it's earnings and they surprise, I might be able to actually make money and maybe make up any of the loss that I have. So in this case, the max loss on this play is $3,000. I shorted at 230. I bought calls at 255. That's a $25 per share difference. Then I spent about $500 on the contracts. If I lose on all of them like I did on the end phase and Costco, I'm still holding short, but my insurance, I already lost on that. So we can lose with this strategy. It just made things a little bit better and gave us more flexibility. But if this kind of stays and doesn't do anything over the next 23 days, because I grabbed a July 8 contract, pretty much I will lose $3,000. But I think tomorrow's going to be a big move by the end of the week leading into next. I think we'll be able to see something and close out So I really like that play, but keep your eyes out for that one. Again, it is going to be a big one for the market, I think, and it's kind of just creeping up on us for earnings. So watch out for them. That's number one. Number two, going to be looking at Wells Fargo, and I made a trade. We've been talking about this yesterday. I went for Citibank as the surprise winner, Morgan Stanley as the easy winner. Got calls on both of those, and then on the downside, I decided to grab a short on Wells Fargo today. So I think they're going to be the bank stress test loser. The options are kind of in the middle. I wasn't too excited about the play, but I was like, all right, it doesn't really move too much, and I think there will be a big reaction. And in this case too, I made sure I overinsured, because if I'm wrong and there is a catalyst and it moves big, we can still make money on the opposite direction. So kind of gives us a little bit of a optionality, as some would say. But I grabbed a short there. I did 300 shares instead of 100, shorted 300 shares at 38.60, and then I bought 10 calls for July 15th, slightly a little bit more time, but then the calls were at $42, so it's about $3.40 of risk per share. So that on 300 shares, it's like $900, $1,000 max risk, and then I spent $400 there for the contract. So I think my risk is somewhere between like $1,200, $1,600. I wrote it down quickly here, but we got to get to it. All you got to do is add up the max loss between the contracts and then how much you pay for insurance. That will tell you, but we'll see by the end of tomorrow, by the end of the week. We'll probably close these out if we get a move. Otherwise, we'll see coming in the next week. But that was the second play. And then the third play, I just want to bring this one up. I made it ADI. It showed up on the scanner. This thing does not move at all. Just go look at the daily chart and go look at the options. Option chain is absolutely dead. And then there was like July 1st or July 9th, a random big ass option trade came in. I was scratching my head at it. It wasn't a cross trade. It wasn't like a swap or anything. It was just a straight big order on a dead chain. I was like, all right, this one could be interesting. So thought it was worth the risk. I bought a $200 worth of the August contracts. Only got one. So we'll see how it plays out, but watch that one again. We seen how these scanner plays play out. So we'll see what happens. And then finally, oil, baby. I was going to go into it today when I saw it around that 101, 102, then it bounced up really quickly, but pretty much if it drops down to those levels, I will start looking to add a little bit more to the futures. This may be a pullback. Again, my big danger level is around $92 or $90, but I think around here, I'd be willing to expose myself to some risk, especially if we could get a little bit more of that final wave. And like I've been saying, with them talking about legislation, a tax ban or a ban on the gas tax, it sounds great. Again, it's probably going to lower all of our gas bills, which is awesome, but it's probably going to increase demand for oil. And if the other stuff doesn't get figured out, if summer ends up playing a little bit weird, a lot of analysts are calling for a reverse effect, kind of like we saw with the SPR. So we will see what happens. But those are the main plays. Besides that, didn't make any other plays, just riding out what we got. Again, a lot of bank stress test plays. FedEx tomorrow. Again, I bought it today to hopefully get some of the run up, but I think that one could be a good one. And then really, we'll see what happens with Powell. Watch the discretionaries, healthcare and XLU, some of those safe havens. They came back up today, and that's something I'll watch on the rest of the week. I was going to buy XLV today, but it already ran and we got the XLUs. But pretty much watch for some of the safe havens to come back, depending on what Powell says, any of the data and any of the earnings. That should set things, and really, we'll see what happens from there. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, who are you? Who are you? Calm down. Remember who you are, and tell me you don't got the spirit, baby. Yes, you got the spirit. And I didn't lose sleep because I got the spirit. Oh, they don't feel me, Chad. I know you feel me. If you feel me, you feel me. That's it. If you don't, you don't. That's what just happens at this level right here. So I'm ready because I'm glad that you're hyped. I'm glad you understand what I'm saying. Let's close out the week. It's a short week. It's already Thursday. We're almost there, but just get ready. It's almost July, almost a couple more pows, and before you know it, man, it's going to be the end of the quarter, midterm, all of this stuff. People are calling S&P 40%. People are calling it's going to go down another 20%. Point is, you're in the middle of all of it. Glad to share it with you, chat. Let's keep getting it. Let's stay excited, and don't forget who you are, okay? That's amen. Amen. Okay, I love you. Have a wonderful night, Chad. I'll see you in the morning. Go drink that water, and peace out. I love you. I was about to do it again, but I remembered, so now I can just tell you I love you. And God bless the Chad, baby. I'm going to see you in the morning. Okay, goodbye.